And we have the CEO of Alcoa, Klaus Kleinfeld, on here saying, raise the debt ceiling, fight about other issues afterward. They do not want this. These business leaders truly feel in some cases that you have this happen, it's going to hurt.
Some do. So it's a mix all over the place. But it's interesting that Alcoa would say that. The big Alcoa, of course, had one of its CEOs become Treasury Secretary not long ago, Mr. Paul O'Neill.
Indeed. That seems so long ago, but let's break down today's market action. We've got Jason Rotman, Lido Isle Advisors managing partner. He is going to tell us the #1 thing to watch in the market right now. Last week, he was one of the few to be talking about how the Swiss franc was rallying, and that is a classic distress signal when the Swiss franc is high against all other currencies. Scott Bauer joining us from the pits of the CME. All right, Scott, to you and the action. We were up, we were down, we were closer to the flat line. We end down triple digits, but not nearly at the lows of the session.
No, not at all. But, you had just mentioned a few minutes ago about, watching the VIX. And what I watch is not only the VIX, but the volatility of the VIX. So it sounds kind of odd, but if you look at the volatility of the VIX, that's actually trading near its 6 to 9 month high. So even though the VIX is, closed right above 17 or so, and that's traded all the way up to 20 or 22, the volatility, which is predicting more volatility going forward, is trading almost near its high point. So coming right out of the gate this morning, when we did see VIX trading about 17.5, guys over here in the S&P option pit and other equity pits, I would tell you, they were loaded with inventory and they were just hammering volatility. They were just hammering options out of the gates. And you know what? It was a great sale because we saw volatility actually decrease almost 10% during the day before actually increasing back towards the close again today. So there was no lack of the public for wanting insurance. They wanted insurance right out of the gate this morning after seeing what happened.
Markets have this self-correcting mechanism even when things are out of control, like what's happening inside the Beltway. Now, Jason, a lot of traders saw this not so much as a sell-off, but a buying-in opportunity, saying that, this market could take off once things settle, and they will settle. Eventually, those guys inside the Beltway will come to some kind of agreement. They'll see the market take off again. You disagree. Why?
Yeah, well, politicians are, I think, pretty famous nowadays for kicking the can down the road. And now that kicking the can method has expanded into, the Draghi and the ECB and really the leaders of the Feds of the various countries of the world, Japanese Fed, etc. And I think overall, ultimately, the S&Ps are an extremely bearish technical picture. Scott, as a trader, should know that it filled the gap lower, but it could not rally beyond the resistance point of 1680. And ultimately, since the huge rally on the non-taper event of mid-September, the S&P, that was the top of the S&P. Why did the S&P keep going? It's because that was already priced in, and now I think we're going to head lower. I see Dow going below 15,000 and staying there.
Okay, staying there for how long, though, Jason? That's a pretty dramatic statement.
Eternity.
Not quite eternity, but I'm saying that I think the Dow is going to go below 15,000. I think technically I see 14,750 as an objective target because that's the bottom of the recent support.
Would you buy there?
Well, we'll see how the economic data looks, and we'll see if Coacher Lakota gets his wish of infinite QE. And in that case, yes.
I got to bring Scott back in here. What do you think of that bearish outlook, Scott?
It doesn't seem so bearish to me, actually. I mean, if I would have heard, 10% down from here, that would be one thing. But you know what? If we hit that 15,000 level, you trickle in. You start buying in. And if we hit 14,750, you buy in more. But to me, what I was saying before with volatility and the VIX, these guys, the traders, have been so filled with inventory. They couldn't wait to unload volatility this morning. And the fact that we did not see the VIX actually come near where it was this morning, towards the close today, tells me that we are going to see some tempering, and we may not be in for the next couple days for very volatile sessions. We may see this extend all the way towards the end of the week before we really see something happen. Whether we know whether that jobs number is coming out Friday, then you may see some volatility really pick up. But the fact that the VIX did not hit back to 1750, 1760, even with the sell-off towards the end of the day, tells me calmer days are ahead in the next coming days.
So, Jason,
I would completely disagree with that. As far as the
as you disagree, Jason, show us the money. We're about what's the trade. People can be as angry as they want about the government and decisions that aren't made, but let's make our viewers some money here.
Okay, thank you. So my view is that at this point, with the stock market up so much and all of these fundamental headwinds, potential tapering, the debt ceiling, which is like the 9 trillion pound gorilla in the room that we haven't even talked about on this segment yet, right? With all this fundamental headwinds going on, I'm looking for distressed assets, just like the smart guys do in hedge fund land in Greenwich, Connecticut. They look for distressed assets with underlying value. So one ticker that I'm looking at is MUI, which is an intermediate duration muni bond fund of all things. It's actually underpriced in terms of its net asset value,
Jason,
and it's got a killer yield.
Jason, you're for munis, but at the same time, a lot of these concerns about debt and what government is doing is spending too much leads to questions about whether some of these cities are going to default. What if I buy into a muni fund just as we're about to have all these muni defaults?
Well, the key, and that's a good question, but the key thing to understand about all these multi-issue muni funds is that it's not all state or city-based. It's actually based on
distinguish?
projects.
Because in this environment, when there are a lot of states that are in deep trouble, I'm thinking Chicago, I'm thinking of places that could default on their bonds. How do you separate the wheat from the chaff?
Well, first of all, diversification, if anything, I would say is the holy grail of investing. So you're not buying one muni bond on one state or one city or one project. You're buying a fund with 300 issues, number one. Number two, you look for the numbers that make sense. This MUI ticker is trading below net asset value, and it's still got a 6% yield. At this point, that's enticing to me.
Okay, enticing, but what about you, Scott? Looking at the trading action, what can we expect when the markets open tomorrow? And by the way, we'll check on futures when they do hit. That's in about 5 minutes, 7 minutes, 15 minutes after the hour. But you tell me, if there is a government shutdown, nothing happens at midnight to stop that, are you expecting a wildly volatile day?
Not at all. I do think, we could be within, 1.5% either way, but I don't think that's super volatile. I think it's already priced in. The fear, the VIX, it's already priced in that there is going to be a government shutdown. I think that for tomorrow and even for the next couple of days, if there's anything in the marketplace, we're going to see the move upward. I think any move downward is limited for over the next couple days. Okay. Jason's talking about, the market over the next month, 2 months, 3 months, a quarter. I'm looking at it in a matter of hours and days.
Hey, Jason, you gave us one long play, the muni fund. I want to give you a chance to throw a short play in there because you do see a lot of opportunities to short, and one is ENV. Tell us about it and why it's a short.
So ENV, and from time to time, at various times in the market, when it looks frothy, I like to do one of my short screens. And ENV came up for me somewhat recently. It's called InvestmentNet. It's based in Chicago. Not necessarily a bad company at all, so don't get me wrong. But again, I'm all about the numbers. ENV has a 500 plus price to earnings ratio. It's got a price to book, a value ratio of 8.02, and it's not down over the past year. It's up 166% in the past 52 weeks. It's trading at about 31 and change a share. I see an at least 20% decline down to 26, just based off of valuation and numbers. So I'm pretty excited about that idea.
Good stuff, guys. Jason, thank you very much. Jason Rotman, Scott, we'll check back with you in a couple of minutes.
We have some breaking news, David, amidst all...
Well, both gold and oil fell today ahead of the potential government shutdown, but they ended higher for the quarter. Let's head back to the pits of the CME. Scott Bauer is still there. And there she is, ladies and gentlemen. Sandra Smith. Sandy, I want to start with you. First of all, just some good old common sense from the Midwest. What do the traders think is going to happen with this mess inside the Beltway?
That a deal's going to get done, everything's going to move on. But the other thing we've been focusing on is, okay, so maybe things are different. Maybe there will be a shutdown. Even if that happens, we were all looking at the market data earlier. The last government shutdown in late 95, early 1996. The stock market basically did nothing, and in fact, it went a little bit higher. And then when everything came back on, the stock market rallied.
And we have to admit, at first it goes down, but after a couple of days, people say, it's going to get better. We can live with this, whatever. It's going to get resolved, and then it goes back up to normal. I think you're right.
That's right, and if you're looking at the commodities market, what a performance. You commented on the quarter, David, and for the quarter right now, we're looking at oil wrapping up 6% for the quarter, silver prices up 12%, gold up 9%, some pretty spectacular performances and not disconnected from the stock market, because if you look for the quarter, the best sector performer was materials. So anything connected to those commodity prices in the stock market did very, very well.
Scott Bauer, What do we see with the futures tomorrow? Again, you and I have been talking about this in the past 2 hours. What do we anticipate if there is a government shutdown?
I think we go higher, and I think volatility comes in. And, you know, one thing that I was really watching today, if you watched Goldman Sachs, if you watched JP Morgan, and JP had some big news towards the close, Citi, those things were all down pretty big right off the opening. And then throughout the day, they rallied back. And then with the sell-off at the end of the day, those stocks held. They held where they had rallied back. Those were some financial leaders, which obviously financials have been pretty beaten up recently. But those, to me, that was pretty key. I think that the market actually goes up tomorrow unless we hear something.
Let me just interrupt here. The CEOs of the nation's largest banks are going to Washington, D.C. tomorrow to meet with the president to convince him to get together with Congress to get rid of this stalemate. It is so far Goldman Sachs CEO Lloyd Blankfein. We see also on the list Michael Corbett of Citi, Jamie Dimon, J.P. Morgan.
Jamie Dimon will be there.
Yep.
All right, that was my question.
That's what it says.
I wonder if there'll be a sidebar to that conversation.
Bank of America, and we have more breaking news. Mark, what is it? President Obama is going to speak in just about half an hour. 4:45 is the